burden. Of course, the split vote, on the decision itself, that is also an important factor.
Exactly. So thank you, Ritu. So I probably 35 with some tweak in the stance, not neutral yet. So play on the focus of withdrawal of accommodation, probably somewhere. I think this is important from what Abheek said. Inflation remains sticky, but my sense is that we are approaching the terminal rate. We are at 6.5 for the terminal rate. If we are correct on that, so the need to actually communicate that while we are approaching the terminal rate, market should not get too far ahead of themselves, because that will negate, that will neutralize some part of the if financial conditions ease. So the communication and the balancing between moving to a terminal rate, the reason that I'm saying that the need to be careful is that we are already seeing some signs of a slowdown. I'm worried that a continued pace of rate hikes will not have a linear reaction. You will get some non-linearity at some point in time, some tipping point, which they need to keep in mind. So that communication for markets, as well as mindful of the real economy, that will be the critical balance that the MPC will have to deal with.
Yeah, Saugata, I would not be surprised if the RBI even wanted a bit of slowdown, especially when you look at the external sector. The Indian economy firing on all cylinders has meant that it is consuming more imports. And the fact that the world is not growing as well as India means we are selling fewer exports. Now that is a worry. I wouldn't be surprised if the last 2 days fall in the rupees because somebody has an inkling on the November trade deficit, which is probably uncomfortably high. So Kaushik, on that, should not the Reserve Bank actually be interested in tempering consumption in India because it's leading to too much of import consumption?
Hi Lata, good morning, and very good point. And just to summarize, we are also going with a 35 basis points rate hike call. And we think this will be the last rate hike from RBI in this cycle. So it's important how they communicate that. They'll obviously not tell us that it's the last rate hike, but they'll probably kind of change the stance. Maybe one option is change it to neutral, because that gives them the maximum flexibility of wanting to hike at some point of time, or pause, or even consider a cut with a certain amount of pause. So neutral could be a good strategy at this point of time. Or what they can do is tweak the language and say that the MPC remains focused on withdrawal of accommodation, while acknowledging that the substantive amount of cumulative rate hikes that have happened are yet to kind of filter into the real economy, because transmission happens with a lag, which would go to signal that the 300 basis points odd hike that the money markets have taken in this year, RBI has done quite a lot, and beyond this, RBI can be in an autopilot mode and allow inflation and growth to reach its desired level. To your point, the only thing that RBI can do on current account side is to lower the non-oil, non-gold imports momentum, because RBI doesn't have control over oil or gold. So the best they can do is slow down the economy to some extent so that the current account deficit comes down to some manageable levels of financing. I think by the time we go to next year, current account will be at about 2.5% of GDP from 3.5% of GDP in FY23. But the absolute number will still be high. We are expecting current account to be 90 billion next year, which is still a big amount to finance. So therefore, rupee, in my view, for the time being, will remain in the range of 80 to 83. RBI will not want rupee to breach 83. At the same time, if there are flows coming in the next year, I think RBI will buy a lot of dollars and keep rupees stable within 80 to 83. The thing to watch out for would be RBI's focus on inflation, the forecast that they'll give for July, September, and whether they give a number close to 5% for July, September as well.
Okay. I'm sorry I'm interrupting you because we're waiting 2 minutes for the governor to start. Lakshmi, what is priced in? What if it were 25 basis hike, not 35?
Hi Lata, good morning. So I would say that bulk of the news of a 35 basis point is already priced in. If it were to be a 25, it therefore will indicate that it's not done yet, because the underlying stance or the accommodating policy guidance is going to be very critical. As we speak right now, whether it's the OIS curve or the the cash market GSEC curve, both are kind of pricing in. Market is kind of toned between 25 and 35. Bulk of them still voting in favor of a 35. But the accompanying stance, I think, is going to be important today more than the actual quantum of the rate hike decision. I think that's going to be very, very excruciating watch, at least for the markets right now.
Well, Amandeep, I'll toss it to you as well. The stance, like Lakshmi said, is going to be the most crucial. You factored in a 35 basis point hike as well?
I think at the present juncture, markets clearly are with the consensus. So it's a dovish hike, which essentially means 35 basis point with a likely change of stance. But if you really ask me, I think, in my opinion, this would be too early for RBI to really box itself in by changing its stance. As some of my fellow panelists have also indicated, that there are still a lot of uncertainties around the path taken by the G7 central banks. So I think in that backdrop, it would make sense for RBI to keep its options open. So as of now, 35 basis point with no change in stance.
Okay, Abheek, final thoughts, because we just have less than a few seconds to go before the governor speaks.
Well, let's just see. I mean, I think 35 is pretty much the consensus. I'm just worried that it could even be a 50, given some of the recent developments. Hopefully for the markets, at least, it is not desirable and it will not happen. But I think the challenges remain both on the external side as well as on domestic inflation. And we could see some moderation going forward. But how much of it is due to the base effect, and how much of it is sort of a genuine slowdown in pricing power of companies, of other entities, is really an open question, and we'll have to sort of wait and see how not only how the RBI
25-30 minutes. I propose to do it also in the same length of time today, and all the viewers, everyone have been very patient, so thank you.